Hello and welcome. You're watching Ask BQ on Bloomberg Quint. I am Agam Vakil. If you've got questions on equity, this is the perfect show for you. Send them to us on Twitter, Facebook, YouTube, WhatsApp. You can also call us on 022-454-04141 or also mail us at askbq@bloombergquint.com. Make sure you do add the Ask BQ hashtag. But before we get into individual queries, let's take a quick look at the Indian markets, which are under some pressure at this point in time, clocking the second straight day of losses, with a decline of as much as 0.5% for the Nifty and the Sensex down by just as much. In fact, the banking index is actually relatively outperforming, considering the losses here are not as much as the benchmark indices. It's taking a cut around a little less than 2%, 0.2%. So currently at around 27,240 odd. But moving on to your broader market indices, that is where you are seeing some amount of additional pressure. So not unlike what we've seen in the previous 1 or 2 odd weeks, clearly underperforming, and the losses here are much more in comparison to the benchmarks too. But let's talk about the gainers and the losers with respect to the Nifty in today's day of trade, starting off with Indian Oil Corp, Cipla and Tata Steel. All of them are advancing by just less than 1.5%. Not too much to speak for otherwise, but we do have the likes of TCS providing some amount of, I could say support as far as the index is concerned, considering it is a heavyweight. Kotak Mahindra Bank and Z Entertainment looking at some gains too. But let's talk about some of the losers then on the Nifty 50. Dr. Reddy's Laboratories are really under pressure after a Form 483 given with 11 observations from the US FDA. Indiabulls Housing Finance also declining by 3.8%, followed by Mahindra & Mahindra down by just as much. So there is a lot of pressure as far as benchmarks go, and the Nifty at least moving back to that range of 300 points between 10,700 and 11,000 on the higher end, exactly what we've seen in the last 3 odd months. So but it's a lot of consolidation coming through. But on that note, I'm going to get in our 2 experts for the day. We have Jignesh Mehta of kiranjadhav.com and Parthiv, Shah of TRACOM Stockbrokers here to answer all your queries. Good morning to both of you, and thanks for joining us. Let me begin by asking you guys about the first one. We have a question from Akshay Mittal. His question is, please advise the right price to buy Larsen & Toubro. Let's pull up Larsen & Toubro. Of course, we all know about the auto wins coming through and its quarterly earnings gone by. It's currently at 1,245. Let's take a long-term view here and whether or not these are good valuations to enter. So Parthiv, good afternoon. Let me come on and let's start with you. How are you seeing Larsen & Toubro valuations at 1,250 odd levels, and would you advise Akshay to buy into this stock?
Certainly, I think if he has a 3 to 5 year horizon, I see this company is doing a fantastic act of cleaning up, especially in terms of its working capital cycle as a percentage to its sales. It's trying to focus more on ROEs, and also I think more importantly, we know for the fact that this was a company which was struggling with many of its projects. So now I think they're certainly improving the execution pace, they're improving the order tally, and also I think so far the guidance has been decent. And most importantly, I think the buyback, which did not pan out the way one had thought, I think that's not an issue because they can always use that capital for other order intake and working capital needs. So I think maybe they might even declare a decent dividend. So I think, yes, from current levels, we are bullish on Larsen & Toubro with a 3 to 5 year horizon.
Okay, well, while we're at it, let's also take a technical view of Larsen & Toubro on a short-term basis. Okay, so one second, let me just get the question correctly, and I can get on to that question as well with respect to what we're looking at this point in time. And of course, Larsen & Toubro, as I've suggested earlier, that we are keeping an eye on that one. It's at 1,246. Jignesh, let me come to you on this one. How are you seeing trade with L&T with a short-term point of view?
Well, for the short-term point of view, I don't see any hope just because stock has corrected from 1,310 levels to 1,220. So around we have seen 100 rupees fall in quite a small time. I guess currently we should not take entry in L&T for the short term because short-term stock may correct or stock may go into the consolidation. However, for the long term support line for the stock comes to at 1,100. 1190 rupees. So I suggest if somebody has to buy it, he has to buy it at least with the horizon of 1 year or at least more than 1 year. If he wants to buy, he can start buying it in the accumulation tone. Currently is at least a one part or two part of his holding can his suggested holding can be bought at current level with a stop loss of 1190. I think stock can reach to 1450, which was its earlier high, within 1 year down the line.
Okay, well, let's move in and talk about its associated group companies as well, because we have a question from Sivakumar. He wants a growth potential, and he actually wants to make a comparison between L&T Technology Services, which is an engineering services company, and L&T Infotech, which is an information technology company. He wants to know what the long-term prospects are, and perhaps if you can tell us a little more about, well, the comparison between the two, even though it is chalk and cheese. Parthiv, let me take this one up with you if you track either of these companies or both.
See, L&T Infotech, I think it's basically these two companies were a combined entity, and with the vision of Mr. A.M. Nayak, he decided to segregate the two businesses because he felt the core focus of these two businesses could be best unleashed, with these companies being independent. And the primary difference is L&T Infotech is mainly into software services business, and they are also now venturing into a lot of digital segments. And basically, they are into more of software services, wherein their target markets could be like insurance companies, banks, retail verticals, etc. Versus L&T Technology Services is predominantly an engineering IT services company where their primary markets could be infrastructure management services vertical. They would even have customers like industrials, etc. And things like automation, IoT. I think that's where their core focus is. So I think the word segregation is quite apparent, and both these companies are scaling up extremely well. And I think probably this could land up to be a very good strategy to segregate the two business models. I think it's hard to pick which one to go for, but as per the current run rate and the potential, my bias is slightly towards L&T Technology Services because it's a niche company. There are relatively fewer competitors, and with L&T's pedigree, I think backing them world over, I think that's certainly going to scale up well over the years.
Okay, fair enough. That's your view on L&T Technology Services and L&T Infotech. But Jignesh, let me come back to you. And we actually have two stocks which we need a technical view on. We have Srinivas Rao, and he has a 1 year view. So I'm going to take this one up with you. The first one is Jamna Auto. Let's pull up Jamna Auto while Jignesh can take a look at the stock. It's currently at 51. And of course, Jamna Auto is reeling under pressure. It's down 3.6% today as well, but it has not necessarily done very well in the near past. That said, Jignesh, what is your view here, and what would your advice be to Srinivas on this one?
I think Jamna Auto has corrected a lot, and presently when I see it, the 200-day simple moving average for the counter is around 76 level, whereas the current price is at around 52 level. So a quite big fall, which we have already seen. I think currently this price, the price on the chart is going to go into consolidation very shortly. I think 50 is a good support for this counter. So at least for current time, I don't think exit is something that I suggest. I think Jamna Auto is something you should hold on to with a stop loss of 50 rupees. The stock can take bounce at any time because the bounce has already ripened. It can go to 60, 61 levels in the bounce. Although it is going to be a contra view, so new buy is not suggested. Only if viewer has it, he should hold it.
Okay, and the other question from Srinivas was on Edelweiss. This is again an interesting one, and while we have seen a lot of weakness in Edelweiss because of fundamental reasons, the technicals have also worsened, if I can say that. At 135 now and down by another 3%. Jignesh, if you can come in on this one as well, what would your advice be on Edelweiss?
I think Edelweiss is also has corrected a lot from its 200-day simple moving average. I think the stock is currently into the form where it is making double bottom. I think the previous bottom is around the similar levels. The counter has reached to that level, and I think it is going to consolidate from now. It is quite early to say and predict the double bottom levels, but I think Edelweiss is a contra view. Even though chart does not look that good, it should be bought at current level 135. 125, some levels are on the charts. I think it can be bought with a stop loss of 120. But here on Edelweiss, I think view should be at least long term, at least 1 year view, because the stock could take bounce at any time, and the bounce in the stock is going to be very strengthful. So it can take counter to 144, 146 levels. Edelweiss is a buy from my side.
Okay. Well, in the near term, of course, we've had several stories on Edelweiss. One of them, of course, being their asset reconstruction company's involvement in Bharti Defense, and the other one very recently, as we understand, some of its funds have sold into very heavily as far as ADAG stocks are concerned. But Parthiv, let me take a fundamental view too. How do you stand on Edelweiss now? Do you think it's time to bottom fish at this point in time?
See, I think one really felt that after the massive correction from levels of 300, and when this company was available at around 160, 180 levels, I think time was good. But we saw what markets could do in a business model where there are now uncertainties. Despite the fact it's a very credible management, sound business model, and we have seen the company perform well and tide over the storm. They recently raised 1,000 crores through an NCD. But my sense is anyone wanting to venture to buy such companies will have to give a longer time frame, 3 to 5 years. Over and above that, I think the best strategy to buy into these companies is to buy in a staggering manner. Just don't go all at one shot and buy all your quantities. Buy in a 2 to 3 sort of a staggering manner, which would probably help to alleviate whatever downside which is still left.
Okay, fair enough. So the advice here from a fundamental point of view, keeping in mind 3 to 5 years horizon, well, do a systematic approach as far as Edelweiss is concerned. Moving on to the next question, it is from Yosef Kale, and he wants a fundamental view on Ad Labs. His time horizon is 5 years. Parthiv, coming back to you, do you track Ad Labs?
Totally, I would avoid this counter. Ever since the IPO days, this company has struggled to generate cash flows, positive cash flows. And I think, again, this is a very capital intensive business, and I think the numbers are not coming over. So I think I really doubt whether there could be a re-rating possible. I would totally avoid this counter. And if at all one wants to be in the similar segment, I think Mandala Holidays is something where at least the cash generation is there. They're free cash flow generating company. They're innovative in their rides. Yes, there were hiccups in terms of the pricing power they faced recently, but again, I think it has a feeling of a better sustainable business model in the same segment.
Usually is a temptation when a certain company becomes, should I say, it goes into 10 rupees per share. A lot of investors out there would get tempted to buy into these companies, but there is a reason behind which these companies have gone down under and buckled under pressure, and hence, as all the analysts would agree, that you should be even more cautious when you get stocks at these levels. And as Parthiv has already suggested, he is suggesting to avoid Ad Labs. I hope that helps your question, Yosef. But moving on to the next question, Rishabh Jain wants a view on Thyrocare Technologies. Can we move into this one with a fresh entry? It's down around 9%, and it's currently at 500. Jignesh, let me take this one up with you. How are you seeing trade on Thyrocare Technologies? What's your view here?
My view is negative, because today it has broken down the earlier supports. The counter used to hold at least 520, 525 levels from last around 10-20 sessions. Today it has broken that, so it is a down flag pattern breakout. The stock can correct even further, although currently there is no no entry for the shorts, but I'm sure exit is something I suggest, and if the viewer doesn't have this counter, he should stay away from it.
Okay, Rishabh, I hope that helps. Of course, avoid is what has been suggested. But moving on to the next question on YouTube is from Emil. Long-term view on Muthoot Capital. That's the question coming in. So I'm going to take this one up with Parthiv. Parthiv, we've seen some strength in Muthoot Capital. Well, actually, recently, today, of course, is under pressure. It's down around 6.5%. Do you track this one? Your view here?
See, think the company has done reasonably well, and the gold loan segment, I think, where Muthoot and Manappuram are quite dominant players in the south. I think they've had decent, resilient business model wherein I think they've not had much ALM mismatch sorts, and they have successfully raised funding as well. But nonetheless, I think at current levels, probably it does not warrant for a buy. The only reason being that the valuations seem to be fully priced in, and I think there are other banks, I think, which are available at lot cheaper valuations where the business model is more sustainable over the longer horizon. So I think we would prefer that.
Okay. Let's pull up Greenply. We'll take a technical view here on Greenply. We have a question on WhatsApp from Jaiswal, who's purchased about 200 shares at 141. What can be done with this? It's at 129, so he's clearly sitting on a potential loss here, considering his entry price about 12 points away from the CMP. Jignesh, your view on Greenply Industries, what would your advice to Jaiswal be?
I think for Jaiswal, I have an advice. Although I don't get a very good sense out of the current trend, but at least the stock has fallen too much, and the viewer is already sitting in the loss. I would suggest to hold it for a while because stock is resilient to go down, and it has formed its support at around 128, 127 levels. So viewer can at least keep the stop loss of 127 for now. Stock can take a bounce, and bounce can take prices to 150, 155 level. So when stock price goes to 155, viewer is advised to come to us again and take a fresh review.
Okay. Well, let's move on and take a technical view on GMR Infra as well. Jignesh, we have a question from Veena, and she holds it at 17 rupees per share. Again, a lot of weakness coming through. Hold or accumulate? That's the question. So I reckon that Veena is looking to buy into this counter. Jignesh, your view here?
No, I don't think this counter can be bought at current levels because this counter has constantly disappointed us with its performance on the chart. I think from the high of 24, it has never made at least higher tops. Currently, it is falling, and I think it is chasing the line which is at around 15 levels. So once the 15 levels, and today we have seen that 15. I mean, from last two trading sessions, we have seen that even 15 level is broken, so does not get a good sense out of it. I think stay away is my advice, and if viewer already has it, I think he should consider exit from these levels.
Okay, well, moving on to a question from Vivek Kanodia. He wants a 5-year view on two stocks. We have Cochin Shipyard, and the second one is Uflex, where they are said that, okay, well, he's spoken about certain expectations with results, but I'm going to take a fundamental view here from Parthiv. Parthiv, if you track both of these, Cochin Shipyard and Uflex, your view?
I think firstly for Cochin Shipyard, I think overall this is a decent play on the shipping industry and also a proxy to defense, government-run company having good order book, and I think results were decent. But unfortunately, I think these are the companies because of the capital-heavy investment and a lot of lumpiness in terms of orders sometimes which comes from the government, and also a lot of competition at times from the Chinese fleet players and South Korean players. I believe that sustainably wealth creation in such names would be difficult. So I think I would take an avoid of this stock. Second stock being Uflex, I think again this stock also we have seen it has behaved very lumpily in terms of how the earnings pan out because of the raw material input cost. I think in the packaging space, I'm a lot more comfortable in recommending something like a Humateki PPL, which is an MNC pedigree company and has a good clientele base, and I think that's where we are more bullish.
Okay. Well, moving on to HDFC Limited, we want a short-term view, so I'm going to take this up with Jignesh. We have Rahul on YouTube, who is asking for a technical view here at 1940. Jignesh, what would your advice to Rahul be?
I think currently stock has broken its support line. I think this support line used to be very important. 1950 should, if 1950 would have hold, I think the stock could go to 1960. But today we have seen that 1950 is already broken down. I don't see this stock is performing well in short term. At least it can go to 1920 level. So currently, if viewer has it, he should consider exit from from these levels.
Okay, let's pull up Motherson Sumi because we've had the earnings come through and it has shown some strength today after the earnings had, through actually, it's actually given up all its gains and it's now once again down as much as 0.7%. The reason why I wanted to pull up Motherson Sumi is because we have a question with respect to GNA axles in the auto ancillary space. We have Saurav Kumar who says that he's bought GNA axles at 444 rupees per share, clearly making a considerable loss where his, there's been an erosion of as much as 33%, now at 297. Parthiv, what would your view be on GNA axles? What would your advice be?
Frankly, we are still not bullish at these levels as well, because I think these companies had a huge run. I think when the cycle play was very strong, and I think the earnings also coming in good. But we know for the fact that at the levels, unfortunately, where he has invested, I think the valuations were extremely stretched, and any sort of negative commentary and the Class 8 trucks, where a lot of the business also comes from, has been, I think, struggling in terms of the sales number coming from the US market, which bodes negatively for the futuristic orders, where even Bharat Forge, a mighty company like Bharat Forge, has also struggled and the share was also corrected. So I don't see much respite here, and I think it's a tough call, but yeah, at these levels also we're not very bullish on GNXs.
Okay, on that note, we talk about another large cap, that's Reliance Industries. We have a question from Ujjwal Kumar who wants a technical view on it, keeping in mind the short term. Currently at 1258, it's down 1.5%. Jignesh, where do you stand on Reliance Industries?
Yes, I think Reliance Industries is forming higher tops, higher bottoms, but last from 2 days, it has gone into consolidation. I see it is nothing but a profit booking. I think stock even has a very good support at 1250. 1245 levels. So from currently at 1258, I can suggest a long for 2 weeks, at least from around trend for around trend trading session. Stock can again touch to 1280, 1290 levels. So one can buy with a stop loss of 1245.
Okay. Well, another question from Krish, and he says that he's bought Bharat Electronics at around 80 rupees per share with a one-year view. What price can it be averaged at? So I think because it's a one-year view, I'm going to take a technical check. Once again, taking it up with you, Jignesh. It's currently at 77 and it's under pressure right now. And the gentleman's entry price is 80 rupees per share. What would your advice be?
I think if you see on the chart from last around 3 months, the stock has taken support from the current levels. The levels are 77 to 75. Even this time, stock has fallen to this level recently. If it can hold 75 levels and survive on the upside, I think stock can at least go to 100 levels. 100 is the 200-day moving average for this counter. So if viewer has it, I think he should hold and don't go and take a fresh entry because the chart is not looking that good. But at least bounce is ripened, so it can go to 100 levels. 75 should be the stop loss.
Okay, a whole host of viewers out there interested in Cochin Shipyard and the fundamental view here. We have Debarpan Sarkar and Amarjeet Krishnan. I would like to tell both of you that we have addressed this one, and Parthiv has suggested and made recommendations. So you may want to go back and check the answer out as well. But moving on to just one more query before we move into the rapid fire segment. We have a question on Federal Bank. And it's actually from Rangarajan Balakrishnan. Again, let me take a fundamental view here. So Parthiv, do you track Federal Bank and where do you stand on this one?
See, I think it's a well-run bank, and no doubt it had its fate of some bad quarterly numbers, but quoting at around 1.8 times FY20 price to book multiple, I don't see that the valuations are very stretched. And somehow I think this bank always, according to me, was always like a good acquisition target for some bigger bank, and which could pan out in the longer run. But nonetheless, I think even currently the bank is doing reasonably good, and all the issues, legacy issues in terms of its asset quality could be behind. And I think the slippages ratio going ahead could really decline a lot, which should help the return ratios for the bank. So someone having 2 to 3 horizon,
Okay, I think we have a problem with the Parthiv's audio, so we're going to come back to that one. But on that note, I am going to go across to the rapid fire segment. And this is where I would request our experts to keep their answers as short as possible so as to take as many queries as possible. And speaking of which, we have a question from Pankaj Joshi on YouTube. A 2 to 3 week view on Marico. That's the question coming in here. Jignesh, this one is for you. A 2 to 3 week view on Marico.
Well, can be bought for the target of 369, stop loss of 362, 360.
Okay, Jignesh, coming back to you, we have Bobby who wants a view on the Bank Nifty on Facebook. What's your view on the Bank Nifty? What levels would you watch out for?
I think Bank Nifty currently is a hold with a stop loss of 27,197. Bank Nifty can go to 27,320.
Okay. Coming down to a question from Haritha Muneli. He says he holds Infibeam at 45. Will it bounce back? That's the question coming in. Parthiv, I'm going to take this one up with you. Your view on Infibeam, bought in at 45, currently at 33. Do you think it's going to bounce back?
My suggestion would be, we are not at all comfortable. Exit with whatever you are still getting.
Okay, there you have it. Moving on to the next question. It is on... all right, Yes Bank. Parthiv, coming back to you on Yes Bank, your view here. It's a question from Praful Parmar.
If one has a 3 to 5 horizon, go for it. It's a good levels at current level.
Okay, and what about your view on Maruti Suzuki as well, Parthiv? If you can take this one up too, in the valuations, the way they stand currently.
Long-term view is positive, but my suggestion would be anyone entering new, buy in a 2 to 3 staggering manner from these levels.
All right, and we have a question on BHEL, a 6-month outlook. Jignesh, I'll take this one up with you. BHEL is currently at 63. How are you seeing technicals pan out for this one?
I think currently it is forming a buy with a stop loss of 61, target of 65 for short term for 2 weeks from now.
Okay, guys, we've run out of time on this show, so I'm going to thank both our experts, Parthiv and Jignesh, for joining us and taking us through their views, and of course, helping some of our viewers with their queries. But on that note, it's a wrap on this edition of Ask BQ. But for more news and updates, stay tuned to Bloomberg Quint. Up next is Power Lunch.
Indian